A day of two halves on the local share market today. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, the local market has recovered from a sizable early fall despite the Korean Peninsula tensions and the credit downgrade on Ireland. A bit surprising, isn't it?
Yeah, look, actually a really credible performance by the Aussie market, having closed down only about 4 points. We were down about 40. Last night, three major issues which are being referred to as a trifecta of gloom. Obviously, the Irish bailout and the flow-on effect from that at the moment. Overnight, also, the US Federal Reserve, the central bank, in fact dropped its forecasts for 2011 in US growth terms from 3% to 2.5%. And obviously, the unemployment rate is not going to come off as much as they'd hoped in that year, although they are forecasting about 7% into 2012 on unemployment. And then, of course, the overlay was what was happening late yesterday afternoon on the Korean Peninsula. So that didn't help markets at all. European markets very weak. The FTSE down 1.75% and the Dow Jones down 1.25%. Given all that, we've had a very good market in terms of a pretty strong recovery. Let's put a little bit in perspective, though. We've already fallen nearly 5%. We saw highs of 4,800 on the ASX 200 barely a couple of weeks ago, and we're now at that 4550 sort of level. So, that we've already factored in some of this negative sentiment.
So how's the gold sector fared? Has it reflected the doom trifecta you talk about?
Well, look, fairly typical of when we see these short-term occurrences take place. There is a flight to safety and a flight to quality. So both the US dollar and gold rallied quite strongly last night. The US dollar particularly against the euro and the yen, and the gold price jumped about $20 an ounce to $1,377. So, an understandable reaction, but I think that's really all it is. Newcrest certainly rallied today in our market, up about 23 cents, but not a huge gain. Probably more importantly is that the rally we've seen in the Aussie market today was very much broad-based across most sectors, and in fact healthcare and telcos were actually ended up in the black.
And Martin, you've got your hands on some earnings and cash flow analysis, which has thrown up some interesting disparities, I gather.
Yeah, look, very much so. We thought it was quite timely to have a look at this. There's certainly a two-tier economy here in Australia, and quite understandably, those stocks with exposures to the commodity cycle and/or growth stocks are the ones that look really quite interesting. Not only because they've clearly gone through the process of improving balance sheets, but they've got very strong cash flow. But the question, of course, is, are they seeing earnings growth? And in terms of the commodity stocks, yes, they are, and in particular the growth stocks as well, such as Woolworths and Coca-Cola. On the other side of the coin, however, there are plenty of companies that have improved their balance sheets and have strong cash flow, but aren't seeing the earnings or that top-line growth coming through. And stocks that are notable in that area in regards to this filter are stocks, for example, as BlueScope and Boral. So a couple of the astonishing numbers is we looked at the cash flow side, the net cash flow that's able to be invested, that's after CapEx, after dividends being paid. For BHP will be about $17 billion a year, for Rio about $14 billion, and for Woolworths on the same basis about $1 billion a year. So investors can take heart that these companies are in very strong position at this point in time, and in regards to the commodity stocks, we certainly think that cycle is going to continue for quite a while longer.
Martin Lakos, near the end of the year now, but thank you very much for talking to Lateline Business.
Always a pleasure. Thanks, Tikki.
To the other major movers on the local share market, outdoor retailer Kathmandu rose 5% after a jump in sales. The resources sector was mostly in the red, with Rio Tinto down 1.2%. QR National continued to creep up on its third day of trade on the ASX, and Telstra continues its good run, the federal government agreeing to release the NBN report and lowering the cost estimates by $8 billion. Turning to currency markets, the dollar is up against all the major currencies, while the euro continues to take a battering. On to the commodity markets now, and in New York, oil continues to drift lower, gold is steady, and copper has rallied after a big fall overnight.